Welcome to another episode of Merill Talks, the channel where we discuss everything from the stock market to global economics and how world events affect your investments. As usual, I have Merill fund manager Marc Ellazidi with me. He has managed money from Switzerland, London and finally Malta for over 2 decades. Welcome, Marc.
Welcome, Mike. Welcome, everyone.
Before we get started, the disclaimer is going to pop up for a few seconds and will be read again at the end of the video. Our last episode of Merill Talks was dedicated to Japan's re-emergence in the semiconductor sector. First, we would like to thank our audience for the positive feedback on the last video. If you wish to receive more information, you can join our LinkedIn page, Merill Investors, or our website, merillfunds.com. We want to continue exploring Japan with you from an investor's perspective. The yen decline and the intervention of the Bank of Japan have been in the headlines in the past weeks. If your investments are allocated to US tech or European stocks, you would think that you should not be concerned, but you actually might be wrong. One of an investor's fundamental principles is diversification. Therefore, you should not exclude Japan from your investment universe. Warren Buffett, the famous value investor, decided to invest in Japan, and at the age of 93, he has nothing to prove to the current and future generation of investors. I invite you to revisit our video on this topic, The Land of Rising Stocks, Warren Buffett's Bet on Japan. In today's video, we discuss how Japan was the second largest economy not too long ago and has experienced 3 decades of stagnation, well known as the lost decades, a period that refers to the 1990s but has extended into the 2000s and the 2010s. Marc, what is going on with the yen? What can you tell us about the Bank of Japan's interventions? And should we worry about investing in the yen if we are based in euros, dollars or Swiss francs?
Before I will answer these questions regarding the yen, the policy of the Central Bank of Japan, and especially if you are concerned because you are based in Swiss francs, in euro or in dollar, let me bring you a small anecdote about my past back to 1996 when I was a student and I was traveling to Japan as a student. I mean, I can tell you, I was suffering a lot because the yen was quite high and I couldn't afford anything. Really, nearly everything, living in a hostel. And now, if I'm putting the perspective and traveling through the time, and we are now, I would say you go to central Tokyo, you want to have a bowl of ramen, I know everyone likes ramen, and it costs you only €5. It's incredible. Even that, if you want to have a fancy hotel in a central downtown Tokyo, near Ueno Park, and you think, it could be very expensive, I couldn't afford it, and $75. I mean, that's why there's this massive catalyst, and that's why everyone wants to visit Japan at the moment, which is creating a maximum boom, I will say, on the tourism, for the tourism industry, with, I will say, also with a negative impact. But back at that time, I will say, unlucky I was that the yen was too strong, that I couldn't even afford myself, a bowl of ramen.
Marc, a very popular strategy in Japan, the carry trade. What can you tell us about the carry trade?
Yes, it's good, Mike, that you are bringing this point. I mean, to start a journey here, to understand what's going on in Japan, we need to come with another cultural aspect, which is a lot of women who get married. They stay at home and they manage the money of the couple. And why? And they are, we call them Miss or Mrs. Watanabe, because they are trading and they're actively trading on the FX market, and especially they are doing the carry trade. And as we can see in this example, you can borrow your money in yen and invest it in Mexican pesos. You can borrow on the yen like very, very low interest rate, maybe even negative in this case, not long time ago, and you can receive, I will say, 6%. And it was a very popular trade, and the Japanese, especially Japanese women who are managing the saving of the family, have been investing heavily, which creating even some very interesting situation, I will say, when the retail market could be potentially bigger than the institutional market on the FX side.
And Marc, interesting that you mentioned the carry trade. Obviously, since they are retail investors, you have these obviously normal people that are borrowing money and taking on currency risk.
Correct.
Is this something that could have some bad effects on the actual retail investor carrying the trade?
I mean, you have to understand that the carrying, I will say the retail investor here are sophisticated retail investors because, again, as cultural aspect, you know, in the Japanese society, when the women get married, normally they are highly educated and they stop to work. So they have a knowledge of the race because they are probably university graduated. So I think it's a very specific thing, Japan, and it's a cultural thing. So that's why I say it's a cultural thing because the women are managing the money, even I will say the small money. I mean, the husband is giving the money at the end of the month, and after the woman is giving back the money. Okay, you want to have a drink, she's offering this, but the rest of the money, she's really taking care of this. So she's really, I would say, quite risk averse in the way, but also she understands that she can get more money by investing money in Mexico. That's for sure. Because she knows at home, from a domestic perspective, she doesn't earn enough money. I mean, she cannot buy local bonds, and we will discuss about this later on, because especially the yield in the local bonds. But I think before we start this, I think we need to show on the screen here the situations worldwide and where do we stand and where the Japan standing compared to the rest of the universe. And I think just check here on the screen of an impressions of where are the yield on the developed market. Yes, as you can see on the screen, I mean, if you have been invested in a US dollar, you receive something above 5%. Similar situation if you have been invested in United Kingdom, I mean, on the sterling side. And I will say if you have been investing on the euro side, and I will say specifically Germany, which is always the reference for us in Europe, you have been receiving 3%. Now, as we can see, if you want to invest for the next 10 years in Japan, I mean, you barely receiving 1%. So with this kind of context, I mean, you are pushed, if you are domestic investors, if you are based in Japan, I think you don't have so much solutions in the way than investing abroad. And that's why it's creating a lot of impact. And that's why I want to go to discuss with you, Mike, and with our audience, to discuss about a little bit more about what's going on the policy side, the monetary policy of the Bank of Japan, but also where do we stand on the interest differentials, because we're talking about carry trade. Now we have to discuss about a little bit about the interest differentials.
And Mark, another point tying up both the subject of interest rate differentials as well as the carry trade. Obviously, as those differentials widen, the opportunity for a carry trade makes itself more presentable and makes itself more attractive.
Correct.
And obviously, is there a point you'd want to add in relation to this type of?
Yes, I mean, I think we need to just explore, and you can see on the screen, I want to give you the perspective as a European investor, but also if you are US investors. In this case, you see the differential, it's quite high. And in this perspective, you can see this differential. We could think about not long time ago in Europe we have been in a negative rate, but even in this context, as we can see, the trajectory of the yen, it's like slowly going from negative rate to barely 1%, when for us in our context in Europe, as we say, we are moving now, we are approaching, I would say not moving now, but approaching 3%. So it's attractive for domestic investors to invest abroad. And on the top of that, you receive a good yield, but you receive also the appreciations of the currency in the way, because you are buying this currency and you have been selling your local currency.
With all that's been happening in the global economy, Japan was the last man standing when it came to negative rates. Are we anticipating any changes, Mark?
I think that's why I say it's interesting, because they are, I will say, anti-cyclical when the rest of the central bank in the developed world have been going into the directions of cutting the rate, which is effective, for example, for Sweden, Switzerland, and probably soon with the ECB, more like questions on the Fed, but they have been on another direction. And that's why I want to discuss a little bit more with you, Mike, and our audience to come and to discuss how the impact of the new governments who took place in 2023 and how they have been changing their policy. So I think it's a dominant factors that first you have a new governor in place who took place in 2023, and you have a previous governor who was in place from 2013 to 2023.
Thank you very much, Mark. I hope.
Thank you, Mike. Thank you, the audience.
As much as I did. This was a very interesting conversation to have, considering what is going on there in Japan. I hope that you can check out Merill Talks' YouTube channel, as well as our LinkedIn page, Merill Investors. And I look forward to seeing you for our next video where we discuss macroeconomy and what is going on in the global stage. Thank you very much.
The content of this presentation has been prepared for general guidance and information purposes only. Any information provided throughout the presentation does not constitute financial, investment, professional advice, or recommendations.